We understood that in final accounts method, goods could have been sent by head office to branch either at cost or it can be at invoice price. In the previous sessions, we have taken a problem how we have to prepare branch trading and P&L account when goods are sent by HO to branch at cost. Now let's focus at invoice price. If goods are invoiced above cost, then whatever the profit that is loaded on the opening stock, the goods that are sent from HO to branch and the goods that are remaining, that is whatever the profits that are loaded have to be reversed. Only then you will be able to ascertain true profits. Okay, to understand, let's take this problem. X Limited has its HO in Delhi and branch in Mumbai. HO supplied goods to its branch at cost plus 33 1/3%. From the particulars given below, prepare branch trading account in the books of HO. You have opening stock 40,000, goods sent to branch 2,50,000, return to HO 10,000. If you notice, all are at invoice price. IP stands for invoice price. Then you have sales, cash sales 1 lakh, credit sales 3 lakh, discount allowed to customers 10,000, closing stock at invoice price is 60,000. It is estimated that 2% of goods received are lost through normal wastage. And what is it you are asked to prepare? You are asked to prepare branch trading account only. That is, we need not get into branch P&L. It is sufficient if you just calculate branch. If it is sufficient if you just prepare branch trading account. Okay. So what we have to do is, see, in this process, you have to understand that the opening stock, goods sent to branch, goods returned to HO, closing stock, all has profit element loaded in that. So it is our job to remove the profit that is loaded on these items to identify what is the exact profit or true profit. Now what is happening with this company? What is their basic cost? What is the profit they are adding? What is their selling price? We have to find all the three. The information in the question says they add 33 1/3 profit margin on cost. So we'll assume cost as 100. That is, selling price will be 133 1 by 3. Okay. That is if you are going to express in percentages, and if it is in value, it is going to be 100. 33.33 it goes, so selling price will be 133.33. So whatever you have is at 133.33 level. Okay, so if you want to know what is the exact cost, you should know what is the 100 equivalent. Okay, because if you notice, all your opening stock, the goods sent to branch, closing stock are at 133.33. Okay, it means you have to divide these items by 133.33, then multiply with 100 to know what is the exact cost. Okay, so we'll do that. We'll prepare branch trading account. So we'll write in the books of head office trading account for the year ended, debit and credit. Now the first item what we are going to capture is opening stock. At invoice price it is 40,000. So we'll write to opening stock in the inner column 40,000. Why we are writing in the inner column? We have to remove the profit that is loaded. And how we are going to remove? It is simple. 40,000 is equivalent to how much? This 40,000 is equivalent to 133.33. So what is 33.33? So if you can find out, that will give you the value. Let's see. So let's calculate 40,000 divided by 133.333, and it goes multiplied by 33.33. So if I calculate in this way, what I am going to get is the profit margin that is loaded, and that works out to 9,999.99. Round off, we can say 10,000. Now let me simplify this. What we understand is selling price is equivalent to 133.33. Okay, and what is the profit element that is loaded? That is 33.33. So 133.33 divided by 33.333. So if I calculate The figure works out to 3.999. It means it is 4. Okay. So what we can say is 1/4 is the profit. Clear? Or let me put it otherwise, 33.333 divided by 133.333. So what is the percentage? It works out to 0.25, 25%. So simply we have to remove 25%. That is, instead of a complex calculation like this, I can simply say loading is nothing but 25%. That is 1/4. So subtract this 10,000. So what I'm going to get is 30,000. So this is the cost of opening stock. Okay, let's go back. Next we have second item, goods sent to branch at invoice price, that is 2,50,000. Goods sent to branch at invoice price is 2,50,000. Now immediately check whether there is any return. Yes, you have here the return to head office at invoice price is 10,000. So what is the net goods sent to branch? 2,50,000 minus 10,000, it is 2,40,000. Okay, so we'll write two goods sent to branch, which is 2,50,000, less returns to head office, it is 10,000. It means the net goods sent to branch is 2,40,000. Now from this we have to remove the profit, and I told you simply subtract loading as 25%. So less 2,40,000 into 25%. This 25% can also be written as 1/4, right? 1/4 is also 25%. So 2,40,000 multiplied by 1/4 is going to give you the value as 60,000. So 60,000 is the profit loaded on goods into branch. So 2,40,000 minus 60,000, we get the value as 1,80,000. Fine. Go back. Next item we have sales. We have cash sales and credit sales, 1 lakh and 3 lakh. So let's capture. By sales, cash it is 1 lakh, credit it is 3 lakh. So total is 4 lakhs. Then we have discount allowed to customers. This is an item which will not find place in trading account. It will find place only in P&L. Okay. So this will not appear in trading account. Then we have closing stock at invoice price. So we'll write by closing stock 60,000, but we have to remove the profit loaded. Okay. So we'll say by closing stock 60,000. In that simply apply 25%, that is 1/4. 60,000 into 25% or 60,000 into 1/4, that is 15,000. So we get the closing stock at cost, which is 45,000. Now we'll do the totaling. Totaling on the credit side is higher side. It works out to 4,45,000. We'll compare on the items on debit. We have two items. One is the opening stock. The other one is goods sent to branch at cost. The difference gives you what is the profit. So what is the profit? You get profit as 2,35,000. So we simply say to gross profit carry down, it is 2,35,000.